Welcome to the Innovation Conversation, a podcast about innovators, both in business and real life. Hosted by myself, Ricardo Pascual, and Harry McDonough.
This podcast is sponsored by openexperts.com. Open Experts is a place to go if you're looking to talk with top experts from around the world. That is open-experts.com. This podcast is also sponsored by startupnetworks.co.uk. Startup Networks, it's an online forum where you can find all the resources you need to run your startup. From grants to investors to tips and tricks on how to be successful in your startup.
This podcast is also sponsored by ODEV Tech. ODEV Tech is your premier software development partner. Make sure to check them out at odev.tech. Hi, and welcome to another episode of the Innovation Conversation. Today we are joined by Simon Penson. Simon, welcome.
Hello, and thank you for having me on the show.
It's a pleasure. Simon, would you like to introduce yourself to the audience?
Yeah, of course. Where do I start? I guess for the context of this conversation, it's probably worth me talking about, just very briefly about, kind of business and career, really, which I'm sure we'll go into in a lot more detail. But in very short detail, I'm a kind of a career B2B kind of entrepreneur, I guess. Well, I've spent time in corporate, but a career entrepreneur in the B2B space. I've built a series of kind of websites, content affiliate sites, sold those, and then built and sold a quite scaled, large independent agency, and then helped build a sort of early stage SaaS VC business as well, and now do some consulting and increasingly working with PE. So there's a bit to unpick there.
So you have, you have the magic formula as an entrepreneur. You know exactly what works or what doesn't work.
I wish I did. Yeah, I wish I did. I think there's a simple answer to that, and it's I think it's called pig-headedness and determination. I think
this is quite interesting because you obviously created multiple companies. What are the traits that you always think you need to have when you're creating a company that you know for a fact have made you successful?
Yeah, I think about that a lot actually, and I thought about it a lot, particularly post-exit of the agency business, which I'm sure we'll talk about a bit. Because I had some time on my hands to reflect and actually work out what was next and all of those important things. And I think because you question yourself sometimes, I think you think, am I just lucky? Is this just luck, or what is it that's actually doing it? And I have a lot of flaws. There's no doubt about that. A lot of things that I'm not good at. So actually, I think firstly understanding that and being really honest with yourself about those things, because that enables you to build great team and the right type of people around you, because you cannot do it alone. That's really important. And then I think it is determination. The way that I describe it to others is I think you have to do the things that most people think you should have given up a long time ago, and just keep doing them, almost to the point of like some people will think you're insane for doing it, because I think nothing happens overnight. I think there is a belief, let's say, that things are solved in months or single digit years, but actually the saying of you underestimate what you can do in 10 years but massively overestimate the rest is true. So I think it's the ability to just kind of get your head down and just keep plowing on, kind of irrespective of the noise around you.
What was your hardest moment? Because I'm sure all these companies, there must have been some very dark moments, and how did you overcome those as well?
Yeah, I think it certainly as a first-time founder, they really hurt, because I think the first time you go through those kind of journeys, everything's new, isn't it? And I think you take it, you have what you lack in experience, you have to make up in kind of not just, like IQ, but also EQ. So a lot of kind of emotional intelligence goes into it as well. And I think a lot of emotions play a massive part because you're living off them, quite frankly. And so the first time you go through it, you spend a lot of time, I think, in quite dark places, to your point, and everything hurt. And so I've had lots and lots of those and made so many mistakes. It's perhaps unfathomable that we actually made it in the first place. But I think you come out of those things. At the time, they feel like the end of the world, but then a week later, you've made the decision and you've done the thing, or whatever that thing is. And I think you have that new perspective then on not just that, but the wider kind of business experience and life, and you become better for it. So I try and learn from those things now and appreciate that they're not the end of the world.
Interesting. And tell me a bit more about the businesses you started, because there's multiple businesses. So which one was the first one, and what are you doing right now?
Yeah, so in order, so say originally I was I'll start at the beginning. So originally I was very lucky in the sense that I was born at a very good time. I was kind of, coming into the workforce in the sort of mid to late 90s when the internet was just becoming a thing.
Mm-hmm.
And I think that was, so timing is important with these things. There's no doubt about that. And I think working in journalism too, which I was doing initially, in print journalism, working for a magazine, kind of corporate and a newspaper business. And it taught me very quickly that, these beautiful print products were going like that. And yet the sites I'd started to build sort of in the sort of late 90s were, going that way. So like, beautiful print products going that way in terms of audience, these terrible sites that I were building were going that way. So it was really obvious to me quite early that, this thing called the internet was a seismic kind of shift in the way that people consume information. And, obviously that's an obvious thing to say now, but less so then. And so I started building sites and, making a mess of them, building them again, back in the days of Dreamweaver and Joomla and all of these kind of very early CMSs. And they became ultimately a kind of a group of specialist content kind of affiliate sites, as we would know them now. They gave me the wrong way of sort of shortening the story to leave the corporate world behind, which I did 10 years in, sort of, by this point with 2008. And they did pretty well. I ended up selling some of those sites, not significant exit, in real terms, but I guess it counts as an exit, right? We sold them to somebody else. And then that allowed me to kind of really double down on taking what we'd learned from building audience over here and actually selling that to other businesses. And that started in 2009. Became an agency business, normal kind of agency story, really. You start the corner of the kitchen table and, you and an idea. And for the first few years, it was really tough because we were early in market, even in 2008, Facebook certainly wasn't commercially relevant, so it's a very different time. But we believed in this kind of content-led digital kind of marketing piece. And between 2009 and 12, we got to about a dozen people, really hard work, quite frankly. So that was like chapter one, because what we were having to do is educate the market. So we became like sales and marketing first as an organization, which at the time, say, meant slower growth, but actually later on really helped us because we'd done the bit that most people miss. And then we started to accelerate because the market caught up. We'd obviously developed brand and a bit of network effect in there, that kind of stuff. And then in 2015, we were getting quite a lot of inbound offers for acquisition, which obviously we didn't want to sell because we were scaling. But one conversation turned into a really interesting merger opportunity. And then we merged with another agency at that point in May 15 and created a really interesting kind of group that had a broader service offering, really strong senior team collectively, all that kind of stuff. And then we started to grow, and immediately we put the PR out actually that we'd merged. The market kind of started and immediately came to us and said, "Well, you're perfect size and perfect shape for acquisition." And so we ran a process, and by August 16, it wasn't just the plan at the time, but it happened. By August 16, we'd been jointly acquired by Interpublic, with one of the holdcos, and we really backed ourselves. We took an earn-out, which I think at the time most people thought we were mad for taking because we had offers that were bigger up front. So, I can't talk any numbers, but it was a bigger number up front, shorter earn-out. And we took the opposite. We took less up front with more opportunity on the earn-out side and longer earn-out, which everybody thought we were crazy for doing.
Yeah.
And we backed ourselves, I think, because we'd really enterprise back office. We'd really invested in senior team. We got a great senior team. We knew that we had the people in the process to, sort of double, treble EBITDA. And that's what happened through earnout. We grew really significantly. Our run rate was more or less double-digit million EBITDA by the end of 2020, which is when we exited. We obviously didn't post that because our compound annual growth rate was quick, so we posted a number that was slightly lower than that. But it was we sort of more than tripled EBITDA, I think, during that period. And it was a fantastic experience. Very hard, obviously, but learned a huge amount, and then got fired out the cannon on the other end. And I think that's a story all into itself.
And now you invest in companies, and you also advise them on what's the best way of moving forward. Because you did quite a big gamble there. Because you had to not only sell what you were building, but also believe in the company to the point where you could have made more money initially. But then you actually said, you know what, I actually believe so much in what I've built, which I don't think that many people believe in that strongly, that I'm going to continue here until it proves very successful. And that's exactly what happened.
Yeah, that's it. And it felt like that. It really did feel like that at the time. I remember it very well. There was some sleepless nights in there, thinking, is this the right thing to do? And actually, interestingly, I do a bit of work now with private equity, because obviously they're more interested in agency and SaaS businesses, trying to help them sort of buy the right businesses. And I think now knowing what I know about PE, I think I would have preferred to have taken a PE deal, because then you still continue to own a little bit of the business as you go. But of course, with the trade deal, which is the only option we had, because PE weren't really into the market until 2018, we sold in 2016. That deal would have really helped us, because we still would have had a bit of a more or less a 10 million quid EBITDA business, which would have been great. But as it was, we walked away. But there's no doubt that we had a much more successful earn out than a lot of people talk about, right? Because the reality for most is that it's a really tough period, but we had a great team. It's all about the people, isn't it? And probably leaning into a good time in the market as well. COVID was interesting in the last year, but
I can imagine,
ended up being net positive.
You mentioned something quite interesting, which was the sleepless nights. And, I talk with a lot of entrepreneurs and investors, and everyone talks about their sleepless nights. So, what tips can you give to people? How do you go through those moments? Because it's different for everyone. Some say it's friends and families. I know you have a dog, because we were talking about the dog earlier on. Maybe it's just, a long walk with the dog. I mean, how do you overcome those challenges?
Yeah, there is no doubt that it's difficult, because at the time it feels, all encompassing, doesn't it? And I think the challenge that the entrepreneur has as well is that if they are building something successfully, there isn't a lot of time for anything else. And so it's not like you can just switch on and go, all right, well, I'll go and play golf, or I'll go and, do my other hobby and pursuit, because, hats off to those people that can do both of those things together. But I always struggled to do it. I was kind of all or nothing, really. I think really it's talking about it. I think it's mentorship. And I was, I have no doubt, I was lucky to have had a couple of mentors really through that journey, sort of personal business coaches, actually one of which has become a really good friend now, that, kind of really helps you through that. And whether it's a chat over a beer at the pub on a Friday evening, or whether it's, a kind of a sit down and, proper conversation. I think the ability to be able to share that reality with somebody with experience that's appreciated things like that before and has got through it and, has real business experience, I have no doubt in my mind that if I hadn't have had that, I think some of those hurdles would have stopped me. So experience, I think, in mentorship is the answer.
And now as an investor, because you also invest in startups now, what has that bring? I mean, what does your experience bring to the table for this startup? Do you just give out the money, or you actually say, you know what, let me advise you on the best way to move forward? Because there's always that dilemma when you're putting in investors, which is, do I just want the money, or actually want the business advice that comes with this investor, right?
Yeah, I think that's a really good point, because my investor journey obviously started in 2016 when we saw the initial tranche of cash from the second exit. And, I'd always been fascinated in how things work. So for me, SaaS then was the kind of the websites of 99, if that makes sense.
Yeah.
So I started investing in it. I think very quickly I realized that, that these founders had brilliant ideas. They often came from a place where they'd had, fairly unique experience about a particular customer pain or a market. They often were, obviously developers or engineers. They built something that was semi-interesting, but and that's kind of their level of experience. And, I came across these brilliant ideas that got me really excited to begin with. But then I think the reality bites once you're on the other side of the investment, and you realize that, these people are fantastic at doing some things, but not others, and they don't know what they don't know. I was there. I've lived that reality.
Yeah.
And so we've quickly really realised that actually that whole kind of early stage investment world was being run by finance people in the main that, were brilliant at working out what a good idea looked like and investing in it. They were financial investors, but they didn't necessarily have that lived experience that was probably, I have no doubt in my mind that it's more important than the money, actually.
Mm-hmm.
Of course you can't do things without the money, but equally, if you throw money at a problem, then often it creates a bigger problem. So I would say that it's the experience, and that it's also the thing that I'm most passionate about. I think, having come out of the agency in 2020, I realized that, purpose becomes really important when you've kind of, you've solved all the kind of financial, initial financial motivations and challenges and problems through an exit. You have to look at yourself really carefully in the mirror and go, what is it that I really want to do for the rest of my life? And what do I enjoy doing? And, thankfully through that investment process, because I started that in 2016, so it was overlapping a bit, I could throw myself into then helping some of the founders that, I had been investing in during the earnout period. And in that, it did two things for me, really. It really validated the lessons that we'd learned from building the business, because you were seeing it reflected again through other people. And it also taught me that I really loved doing it, and it quite frankly didn't feel like work. It still doesn't feel like work. And I think that's because you see the value, right? The value exchange is there, that, like being able to tell somebody, look, I can't tell you what to do because I'm a minority investor, but actually let me explain what happens if you do that.
Yeah.
And I've done it this way, and this way, and this is what happened, and this is what I've learned. And that, feels like the most valuable commodity in the world, I think, at the time, to both sides. And, I just, that makes me leap out of bed in the mornings.
When you're looking at potential investment opportunities, what's the one thing that is a massive red flag for you? Like, let's ignore all the financials, because obviously those are very clear that there will be red flag or not. But what's the one thing you always look out for?
I've seen a lot of them, right? So, I was a partner at a really great EIS business called Hatch, which we kind of started in 2018 properly. And so, that business now has gone on and is doing amazing things, invested in almost 100 kind of early stage B2B SaaS businesses. And so we've seen a lot of pitches. I mean, we probably got well over 1,000 decks a year, I would say, to kind of initially work through. And then obviously there's, various stages of, IC and decision making through that. So you have to develop a very methodical approach, I think, to working out what good looks like really quickly. And over the years, I think we've learned that, particularly in SaaS, what happens a lot is that you have a CTO engineer, software person that has a great idea, but actually what they really need is somebody alongside them, or ideally a leader in their own right that's much more commercial, because it's the commercialization of the idea, obviously, as well as the idea, but the idea can fall very quickly flat if you cannot sell it and find good and develop really good go-to-market, sales and marketing, and actually create a bit of product market fit quickly. So, people obviously is the key part, because that's really what you're investing in. But then it's like, what type of characteristic are you looking for? And commerciality, I think, is probably top of the list.
Interesting, because it's funny because you mentioned SaaS and investing in SaaS, but I was thinking about CRM systems, for example, right? A very basic example. But in a nutshell, none of them are particularly complex. They all pretty much do the same thing. However, the way that we know about them is because of their go-to-market strategy, right? There's a reason why we know more about HubSpot than we know about Zoho, for example. It also depends on our region, but there's a very good reason because of that, because they have different approaches how to go to market. HubSpot support a lot of startups initially, and they still do, so it's a really good thing because they grow with the startups. Zoho, on the other hand, probably has a completely different strategy. So it's things like that really do make a difference.
Yeah.
And, what do you invest in right now? Is this just B2B SaaS businesses, or you're spreading out to other verticals?
Yeah, so I mean that's certainly what Hatch does. I've started to, I'm playing a slightly different role now, and I think what I've learned over the last few months is that if I go back to the kind of the purpose piece, it's very difficult once you get to 100 investments to spend lots and lots of time with those businesses and really help them. And that's kind of the most for me. So I'm sort of in the process of swimming up, upstream a little bit and spending more time with private equity because, like obviously they put bigger checks into slightly later stage businesses and you can, you have fewer, deeper relationships, and that really plays into that purpose for me. And so right now, that's kind of what I'm doing. So I've got, obviously, we've got a number, almost 100 investments in Hatch, which most of them are doing really, really well, which is fantastic to see. But, I'm now, and obviously I've got some personal investments as well. So I continue to kind of, double down into those businesses and, they are B2B SaaS. All of those that, I've invested in personally, for instance, sit in that space. And then, in PE though, I think, and this comes down to a little bit of the kind of the mentorship piece that I was talking about earlier, is that, my mentors have spent a lot of time in PE themselves. And, I think have helped me understand that, sticking to what you're good at is really good advice, what you know best. And so I'm increasingly spending more and more time investigating, slightly later stage agency businesses, on a fairly broad basis, and sort of tech enabled service businesses. But also obviously the kind of slightly later stage SaaS kind of opportunity as well. So, I'm in that process at the moment of kind of moving and spending my time much more upstream in that kind of, let's say that PE space.
There's a lot of PE. There's always talks between founders about how hard it is to raise investment now. Now, you've been in this ecosystem for quite some time now. Do you think it's much harder to raise investment now than it was a couple of years ago? Or on the contrary, it's always been hard, it's just a matter of, learning the game?
It is hard. I would say actually it's probably easier because the markets outside of the COVID bubble was a weird time because, for some it was really easy to raise money. For others, it was impossible. So I think you kind of have to park that because it was a unique moment in time. But I think, if you look more macroeconomically, from the investor side first and foremost, because obviously these funds can only invest if they have the money to be able to invest. And certainly in the early stage stuff around SEIS and EIS in the UK, there was a lot of nervousness and actually, kind of investment in those schemes really dropped for a while, but it is now coming back. And so there is now more money to invest. Obviously on the PE side, they've, sitting on record amounts of, unspent capital. Everybody's raising bigger and bigger funds and so their problem is actually getting it away. But of course, there is a limit on the number of sort of slightly later stage quality businesses they can invest in. So their problem is, sorting the wheat from the chaff and finding enough, really good quality businesses to invest in. On the earlier stage, I think it has been a capital challenge, but now I think the capital challenge is solving itself, but there are less, again, better, really good quality businesses to kind of invest in. There's a lot of Me Too businesses. So there's a lot of people building, for instance, at the moment in sales tech, for instance, as one example. And so, you've got to sort through a lot of those ideas to really find and back the right team with, the right commercial ability, and, all of that kind of good stuff. So, I would say it's as hard or as easy as, the quality of what you're creating, and by that I mean idea, business plan, go to market, team.
Interesting. What do you think about this AI thing? Because obviously it's not going to go anywhere. And, I talk with a lot of founders and they all say, oh, if we don't have AI, no one's going to invest in us. But at the same time, I also talk with a lot of investors to say, actually, yes, AI is important, but if you just put in AI for the sake of putting AI in your company's name, then we can read through the through the lines and say this is not relevant for AI. So, what do you think about the whole thing?
Yeah, I mean, I wish I knew. I wish that any of us knew, because obviously, it's the first time in human history that we've got something that has a kind of an improvement curve that truly is exponential, right? I think that's the difference, is that in 6 months' time, what is it going to look like? So the pace of change is even greater than it's ever been. And I equally, and then this is an entrepreneur's curse as well, I think, is that it's very easy, and I've fallen foul of this myself, to get really excited about new technology. and then think it's going to change everything immediately.
Mm-hmm.
And, I think we're already starting to appreciate the fact that AI isn't doing that, but it is accelerating change faster than anything before it. And obviously there's a regulation kind of angle to this as well. But, I think my view is that, AI has a part to play in the middle. So I think, good use of AI and AI strategy, and obviously, through my consulting work, spend a lot of time talking to people about this, is that, like, you need to work out how it plays a part, like human at the beginning, strategy, all that kind of good stuff. How can you help it and use it to become more efficient and effective and do heavy lifting in the middle at the moment? Then human at the end to do the kind of the QC and the key touches. So it absolutely has a part to play. And I think, any business of any kind, particularly in B2B, where, say, I spend my time, it is foolish not to have a strategy of, kind of watch, listen, and think. But I wouldn't say, like some people jumping into it and thinking it's going to take over the world. I think that, that may happen in time, but we're not there yet. So it's a bit of it's a watching brief with some action, I think, is probably the way that I'm, advising people on it at the moment. And there's definitely ways that you can create operational efficiency and all of those things already. And for instance, the consulting business that, I've founded called Scaled is, we've been building a really interesting tool to help with, kind of outbound and outreach, for instance. And it's been really good for helping us personalize that at scale and, understand and test and create matrices around testing, messaging and targeting and all of those kind of things. So as I said, it can definitely add value, but I don't think yet it should be, your main focus, if that makes sense.
Yeah, it makes a lot of sense. It's always funny because I always see founders obsessed with the whole AI thing. And I keep on thinking, if it's not relevant to put AI in your name, don't put AI in your name, because why would you, right? It's just going to hurt you in the long run. And it's a bit like saying you have, I don't know, it's a bit like saying you own a plane when in reality you don't own a plane. You just fly with Ryanair all the time. So why would you want to say that?
And you definitely see that in the startup space a lot, is that there are a lot of people that, most pitches you see now are AI something. And when you look into it, there's probably a bit of machine learning in there, but it's not true AI yet.
No, it's just an overcomplicated spreadsheet, I think, most of the time.
The database, yeah, exactly.
Yeah. Okay, we actually mentioned something quite interesting, which is a common myth here in the industry, and everyone kind of struggles with this, which is how long should a pitch deck actually be? Because Y Combinator says 11 slides, and that's more than enough. Then I've seen some amazing pitch decks which are like 30 slides long, but it just flows very easily. So you probably take as long to read them as you would take 11 slides. So you told me you just read 1,000 pitch decks last year. So which one is your favorite? What actually works best?
Yeah, I think I am definitely fan, and obviously in the agency world, you learn this very, very, very quickly as well. Of how to put together a really effective story about what it is that you're trying to sell, because that's really what a pitch deck is, isn't it? It's a story, and I think some people forget that, and they're just like, right, well, we need to make sure we mention this, this, and this, and all of a sudden you are at 30, 40 slides. Yep. And so I think, you can start with a process like that, get everything in that you want and feel like you need to mention, but then think about the narrative through that. And for me, it's really about, starting off with I think it's always really interesting to start off with something that we always used to call a lean-in slide. So a lean-in moment. It's like, we want to get your attention immediately, and we want to explain the value that this brings, in monetary terms or in numerical terms. So if you can say, for instance, that, doing this for a year could on average save the average business $10 million, or, you know what I mean? Try to put a number on it that makes people sit up and take notice, or, we can make 50% more efficient. So X, Y, and Z. I think that really starts to help people value the pain, if that makes sense. And so starting with that, and then obviously working through problem solution, is really important. That makes sense. So, this is the problem we've seen. This is how we've seen it as well, because some context on, what's the unique insight or the unique kind of journey that you've been on to understand this and notice this gap in market, this inefficiency in the market. So bring that to life a little bit, explain the problem, and then explain how you're going to solve it. Obviously, then as well, you need to make sure that you talk talk about team. And, as I said, ideally you find that balance between, technical and commerciality, and a good understanding of go-to-market. Sales and marketing is, I think, music to early stage investors' ears. Well, actually, every investor's ears, quite frankly. And then ultimately a really good understanding as well of what you're raising and why, and where it gets you to and what it buys you. Because I think not enough people bring that to life enough. Is that and they don't, they'll produce financial projections, which quite frankly and understandably are often test the air because it hasn't been built yet, or you've got 3 customers. So I think, every investor at early stage, understands that financial projections are what they are, their best guess, aren't they? But what you want to get an understanding of is that you've spent some proper time really costing out what it's going to cost and what you're going to invest in, and, building a picture of where you're going to be by when. That's really what, from an investor perspective, what you've got to realize is that what we're thinking about, whatever stage, is that we're not buying into what you built so far. We're buying into getting to the next stage. It's the next step in the story, isn't it? And what we also want to be really sure of is that you can get there, because that's either liquidity and exit event, or it's, reinvestment event. So, the challenge with a lot of businesses is that they're only thinking about the next 3 steps ahead, and you kind of need to put yourself in the mind of the investor and tell that story. And I think a lot of people miss that.
Yeah, it makes sense, because I think some people, especially if you're raising pre-seed, they always think, oh, it's just pre-seed and that's it. But actually, you're building a business, and the investor wants to see it grow all the way to, maybe IPO or maybe a successful exit. So, you need to build a business for that. Not just that little moment.
At sort of, early stage PE, they might be buying a business that's doing 2-3 million EBITDA, and they want to get it to 10. So you've got to tell that story, and you've got to convince them that that's going to happen. You've got a decent idea of how to do it, not just the fact that you've well done for building something that's doing a couple of million quid of EBITDA, right? It's what comes next is the key bit.
It's always about the vision. Now, I have this very interesting question to ask you, which is, how startup founders can have a little bit of an overinflated ego. Is that a red flag for you as an investor or not?
No, I think it depends what shape it comes in, really. For me, the key is the ability to understand, to know, and have the self-awareness that you don't know everything, and you are willing to listen and take on advice from people with more experience. I think that's really important, because, and I said, I go back to my own experience, that we would never have got as far as we did without me having that ability, because I didn't know what I didn't know. And yes, I was, a young, punchy kind of entrepreneur, building that, even the agency business. I thought I knew it all, but really didn't. And, sometimes you need to have the ability to be able to externalize that view of yourself, look back and understand the other person's perspective, and appreciate that they have been there, and that, as I said, is probably the most valuable commodity in business, actually.
I agree with you full-heartedly. I think it makes, to be able to have that awareness and self-analysis is one of the strongest tools you can have in our arsenal, isn't it? Because you can just say, you know what, have I done the right thing here? Is this actually the right way forward? Like, what about this advice I'm getting? Is this the right advice? If yes, then I need to change. So having I used to call it coachability. It's actually something quite important to have, isn't it?
That's a nice way of putting it, actually. It's coachability, isn't it? That is key. It's, because you're not going to manage, an entrepreneur, are you? You need to be able to coach them, I think.
Simon, if people want to reach out to you, and you're going to be flooded with multiple startups asking for investment now, how can they do so?
A couple of ways, I guess. LinkedIn, I'm pretty more active than I used to be now. Try and share as a bit of insight there. So obviously /Simon Penson, you can find me there. And also email. So really welcome to email me at simon.penson@scaled, so scaled.co.uk, which is the consulting business. So really happy to chat. And as I said, it doesn't feel like work to me. So if people do want to reach out, I always welcome it. I spend my days now talking to, either sort of clients who are entrepreneurs, investments who are entrepreneurs, or, people that just want a bit of advice. So it'd be great.
Simon, thank you so much for your time. I really appreciate it.
No, thank you, Ricardo. I really enjoyed it.
Thank you. All right.
This podcast is sponsored by openexperts.com. Open Experts is a place to go if you're looking to talk with top experts from around the world. That is open-experts.com. This podcast is also sponsored by startupnetworks.co.uk. Startup Networks, it's an online forum where you can find all the resources you need to run your startup, from grants to investors to tips and tricks on how to be successful in your startup. This podcast is also sponsored by ODEV Tech. ODEV Tech is your premier software development partner. Make sure you check them out at odev.tech.